Whenever we talk to the new generation about careers, one title comes up again and again: investment banking. It's the ultimate dream job for ambitious people who want money, power, and prestige. But why? Is it the allure of multi-million dollar bonuses, penthouse offices, and private jets? Or is it because of the movies that glorify investment bankers as financial masterminds? Think about Leonardo DiCaprio in The Wolf of Wall Street, Christian Bale in The Big Short, or Gordon Gekko in Wall Street. Movies all about money, risk, and the high-stakes world of finance. These films have made investment banking look like the wildest, most lucrative career out there. But what do investment bankers actually do? How do they make so much money? And why are they some of the most powerful people in finance? Is it all just about insane deals and stock market manipulation? Or is there a deeper science to it? Let's dive deep into the pool of investment banking. At its core, investment banking is all about money and strategy. Think of it as the financial elite of the business world. These bankers don't just work with individuals or small businesses. They deal with corporate giants, billion-dollar hedge funds, and even governments. Their job is to move massive amounts of money around the economy, ensuring that the world's biggest companies and wealthiest individuals get richer. Whether it's through mergers, IPOs, or trading strategies, they control and shape the global financial system. Investment banks like Goldman Sachs, Morgan Stanley, and JP Morgan Chase don't operate like your regular banks. You won't walk into a Goldman Sachs branch to open a savings account. That's not how they work. Instead, their clients are major corporations, governments, and ultra-high net worth individuals who need expert financial advice on buying or selling companies, raising money for expansion, or making massive financial moves. One of the biggest ways investment bankers make money is through mergers and acquisitions. Imagine $2 billion companies planning to merge into one giant corporation. This is where an investment banker steps in. Their role is to negotiate, analyze, and execute the deal. They determine how much the company is worth, how much it should sell for, and how to make the deal happen, all while taking a hefty commission. And when we say hefty, we mean millions or even billions of dollars in fees. That's why investment banking is so lucrative, because every deal they close is worth insane amounts of money. Another huge part of investment banking is IPOs, or initial public offerings. You've probably heard of tech giants like Facebook, Google, and Tesla going public, meaning they started selling their stock to everyday investors. But before any of that happens, investment bankers are the ones setting the stage. They decide how much the company is worth, what the stock price should be, and how many shares should be released. The goal? To make the company and its investors as much money as possible. But it's not just IPOs and mergers. Investment bankers are also behind the scenes in financial markets. Ever wonder why the stock market reacts so wildly to certain news? A lot of it has to do with trading desks inside investment banks that manage billions in assets, executing high-speed trades, managing risks, and looking for opportunities before anyone else sees them. These banks have entire divisions dedicated to trading, making money off market fluctuations, and using algorithms and AI-driven strategies to maximize profits. But there's another key player in the world of finance: hedge funds. A hedge fund is like an exclusive investment club for the ultra-wealthy. Unlike traditional investment portfolios that aim for steady growth, hedge funds exist to maximize profits as aggressively as possible. They use complex financial strategies, leverage massive amounts of money, and often take huge risks to generate massive returns. Hedge fund managers are some of the highest paid individuals in finance, earning hundreds of millions, sometimes even billions, in a single year. So, how does this connect to investment banking? Hedge funds rely on investment banks for everything from stock trading to access to insider market insights. Many top investment bankers eventually transition to hedge funds because the potential earnings are even higher. It's all about who you know, what you know, and how fast you can execute trades before the competition. Hedge funds, unlike traditional banks, aren't bound by as many regulations, allowing them to make riskier, high-stakes moves that can either make or lose billions in a day. Now, here's the catch. Investment banking isn't easy. In fact, It's known for being one of the hardest, most grueling jobs in finance. If you want those seven-figure bonuses, you have to work for it. The hours? Brutal. Many first-year analysts at big investment banks work 100-hour weeks. That's 14 to 16 hours a day, including weekends. Forget work-life balance, because for at least the first few years, your life is your job. And if you can't handle the pressure, you're out. So why do people still chase this career? Simple. The money, the prestige, and the long-term benefits. The starting salary for a first-year investment banking analyst at a top firm? Anywhere from $120,000 to $160,000. And that's just the base salary. Bonuses can easily push that number to $200,000 or more. After a few years, you move up to an associate position, where salaries jump to $300,000 to $500,000. Senior bankers, managing directors, can make millions every year, especially if they close major deals. And it's not just the money. Working at a top investment bank opens doors. After a few years, many investment bankers transition to private equity, venture capital, or hedge funds, where the real money is. If you've ever wondered how people in finance get rich quickly, this is how. They start in investment banking, build connections, and then jump to even bigger opportunities. But here's the real question. Is it worth it? Because while the salaries are great, the burnout is real. Many investment bankers quit after just a few years, unable to handle the extreme pressure, long hours, and constant demands. The job is high stress, and if you're not obsessed with finance, it can quickly become unbearable. So, is investment banking for you? If you love high-stakes deals, intense challenges, and working with some of the smartest people in finance, it might be the perfect career path. But if you're looking for work-life balance, creative freedom, or a job where you can switch off at 5 p.m., this probably isn't it. At the end of the day, investment banking isn't just a job, it's a lifestyle. It's about playing at the highest level of finance, making deals that shape the economy, and securing a financial future most people can only dream of. Some thrive in this environment, and others burn out. But one thing's for sure, investment bankers are some of the most powerful players in the financial world. If you found this deep dive into the world of investment banking interesting, hit that like button, subscribe with notifications on for more high-quality financial content, and drop a comment below. Would you ever become an investment banker? Also, let us know what else would you like to see in the world of finance. That's it for this video. Thanks for watching, and we'll see you in the next video. Have a good day, and take care.